Shadim Shari. Holy cow, it worked. I deleted the other stream I had uh, an hour and a half ago, something like that. Normally when Think or Swim go through updating, and they do this every weekend. Okay, this is not new. I usually get a message when I try to log in that it is updating. It will be down for a while. That's fine. But today was something completely different. Today, when I try to log in between 7 and 9, I didn't get that message. I get the proxy server, not whatever. It was all kind of networking things on my end. It was telling me that the problem was my IP address, and it was something completely wacky. It was not the typical, the software is updating, the system is updating, be come back later. So that's why I thought it was something more than it is. And then I contacted my mentor after I try and waste my time for an hour with E-Trade, Power E-Trade. I text my mentor, and he's like, yeah, I can't log in either, and I think it is just a typical updating issues, but for whatever reason, we got a different error message. And sure enough, I just try to log in now, and it pops up. So it is what it is. So I deleted the other rant. Too much efforts have been put into this, okay, for me to completely redo everything. So that was my rant this morning on the other stream that I deleted, because if you put in as much effort as I did, not that it's a hard effort, but it was good effort. Things, useful things that I put into many charts over the past 2+ years or 3 years even, that it would be a shame to have to go back and redo. That's the problem I had. Okay, so real quick, since I deleted the other stream, I'm gonna recap real quick on my thought on the CPI. Now that I have time to look at the CPI, the CPI went up more than anyone expected because of a couple of components. Food at home was flat or barely go up for the past 4 to 6 months. It was great, and we saw that. We saw that reflected in our grocery bill. Food away keep going up and keep going up because people won't stop going out to eat. Only the low end people, okay, only the low end that go to McDonald's stop, or go less, to be more correct. That's why the McDonald's of the world had to give out deals. You don't give out deals, $5 meals package, because people are flooding your store. There is a reason, okay? But the middle end and high end cannot stop going out to eat. So guess what? Restaurant will gladly pass on the higher cost, whether it's ingredients or labor. They will keep doing it. And even if they don't, okay, even if they, let's say if you run a restaurant, right, and you face with tough inflation on wage and tough inflation on ingredients, but you have been reluctant to raise prices for a while because you're nice to your customer. There are places out there that have done that. Okay, I'm sure if you look around your town, wherever you are, you see those kind of people that care enough to try to eat the higher cost without passing it on to their customer, because they felt the customer can't handle the higher cost. But eventually they break. Eventually those people had to break to survive. Okay, because you can be nice until a point where if you don't raise the prices, you go bankrupt or go out of business. So eventually those businesses raise prices, and guess what? if they raise the prices and people still coming in, you think they will stop raising prices? No. It's once they see that it didn't hurt their business, they will inch it up and inch it up and inch it up. I see it down here. I see it down here where there's business that hold the line, held the line, and then next once they open the floodgate and raise prices, seem like every time I walk in there, it's going up. Not by a lot, but you notice it, 50 cents, 75 cents, thing creep up. The consumer have the ultimate power. If you don't stop paying, they will not stop raising. End of story, okay? Now, as far as the other component of the CPI that shocked everyone was the transportation services, and that's had to do a lot with auto insurance. You hear this online everywhere. Everyone's complaining that the cost of auto insurance is skyrocketing. You know why it's skyrocketing? I give people a 5-second pause to think before I give you the answer. If the value of the vehicle that people own and paid the past 3 or 4 years went up a lot, when people are willing to go out there and behave stupidly buying a truck and pay 6 figures on that truck, you think the insurance is not going to go up? You think your insurance, your car insurance for your Toyota that is worth $20,000 is not going to go up if you went out there and get a Ford 150 for 100 grand? Do you think? Does anyone think that the insurance is not going to go up? And guess what? The insurance company is going to jack the rate up for all of us. Okay, so here's an example of poor behaviors, irrational behaviors of people or consumers that buy things they can't afford, buy things they shouldn't have, hurt all of us in the end. It is what it is. Okay, so the auto insurance, just like home insurance. Okay, I will tell you this: the hurricane that destroyed a big part of Florida and Carolina and Texas or wherever it is, you think the insurance company is not jacking up the insurance, home insurance for everyone around the country? You think they just jack it up just for us? So use that common sense and apply to auto, okay? The average car today is more valuable, quote unquote, than what it was 5 years ago. So guess what? The jump in insurance, as shocking as it is, if you think about it, it's not really shocking. It is stupid. Okay? We are to blame. We, okay? We. I don't have a choice. I'm part of the we. And lastly, auto, for the first time in a long time, all year, used car go up. New car also went up. New car was declining as well, but everything went up. Why? Hurricane damage replacement. It is that simple. Okay, you don't turn on CNN or YouTube and see countless neighborhoods and town flooded with car floating and think that those cars don't need to be replaced. And it comes down to supplies and demand. Okay, you are not gonna get people do not need to own a car to drive to work or whatever it is. So the economic of supplies and demand. Okay, dealers, auto dealers are not gonna be nice. They're not gonna say, well, guess what? I have a car lot full of car that I couldn't sell back in June or July, but now that it's the whole town is flooded and people need to buy a car, guess what? I'm gonna raise my prices. The evil of men, the greed of men, the greed of human is in full display. It is what it is. All right. It's not because the economy is strong. It's not because job is booming. People are flush with money. They like to buy cars. No, what's going on in the southeast region of this country have a direct impact on the auto market right now. And it's not just this week. Helene happened 2 weeks ago, and then prior to that, there was another storm. I don't know, I can't remember the name on top of it, but it happened at the end of August. That kick-started everything. So yeah, it is what it is. Okay, sometimes you have to step back from the noise that you hear on CNN, CNBC, and think that, oh, CPI is up because everything is good, reflation, this and that. No, the sometimes the force of the economy, the force of the market has nothing to do with how strong the market is or how strong the economy is or how good the job market is. There's other factors that plays in. It is what it is. But a big part of that is, guess what? The consumer. Okay, the consumer have the power to change the narrative of what business is doing. Business can dictate what we are paying until we stop paying. Keep that in mind. Okay, it is that simple, and I can rant on that forever because I'm the first one to tell you that when it comes down to inflation, we are to blame. The only part of the inflation component that corporate greed has more to do with is, of course, energy. I talk about that all the time. The cartel, the U.S. cartel, has done evil to the consumer with their high prices, with warmongering, stoke the fire of war, disrupt supplies so that they can keep price high. Because higher price equal higher profit. It's all profit motive for the energy company. It has nothing to do with government policy, drilling this or that. Doesn't matter who the president is. Okay? Doesn't matter. If we don't stop the warmongering and supply disruption, the narrative of short supply is gonna allow them to keep price high, even though we are the major producer now. Imagine the US, is now a major producer of oil. We export more oil than ever. So yeah, you think the oil company don't love the high prices they can get by selling the oil to Europe? It's insanity. All right, now I can get off the nonsense and talk about the market. TLT, is it a surprise that we suffer what we suffer the last 2 weeks with strong econ data, and then you end up with strong CPI, strong job number, everything's strong, everything is good. That being said, I increase my TLT holding by 50% over the past 2 weeks. All right, it could be the dumbest move I have ever made in the last 3 years. It could be. I'm not claiming to know what I'm doing. but um but that was just to show you where I am. I am 50% higher in TLT exposure as of today compared to where I was a month ago. So yeah, it's big. Okay, I went in big in the 96, 95 and a half, 95. I went in big. All right. I let many puts aside in the 95, 95 and a half, even 96. I take them. All right. So I increase a lot. Um, Worst case scenario, as you can see, the white line, that's a long term trend line, right? It's here, here, right? It did not touch here. Okay, so let me zoom in on that area. See, it didn't touch. So if you want to do another line, you can. Okay, you can do this line right here. To be exact, to be good, like that. Okay, so it basically add another support line if you want to draw that line. Now I drew the fib before going way back, okay, going way back. This fib started on the bottom last year, last October. Now if you want to get rid of that fib, I can do that. I can remove that drawing and do a different fib. Okay, let's do a fib that go back to the low here, right here. Okay, like I said, when it comes down to drawing fib, you can draw a lot of different fib. All right, there you go. And you can see for this fib, the 61.8 is 92.75. So is it possible to get down there? It's possible. All right. I've been wrong with TLT, and I would likely stay wrong with TLT until after the election. I'm in the camp to say that, you know, after the election, we're gonna see some really nasty data, but I could be wrong again. Won't be the first time with TLT. Am I worried? I'm disappointed in TLT and how it has behaved as far as an investment, but I'm not worried. It's TLT. If TLT crash and go down, we have a lot more problem. Okay, if yield spike again into some crazy thing for whatever reason, reflation or whatever nonsense people want to throw out there, we have a lot of other things to worry about. Unless you drink the Kool-Aid that everything is good, job is fine, everything is great. If you in that camp, then you don't care about reflation. You think inflation or reflation or whatever people want to call it is a good thing because that means that everything is strong. But for me, there's other external factors out of our control for the most part, but we, the consumer, do have some control. It comes down to self-control. Stop buying shits you don't need. I can't stress enough. Okay, but for now, I'm in the camp that the economy is much worse than it is portrayed by the media, by the politicians, and someday we're gonna wake up and see that, oh my God, things are much worse. Last month, when the job was revised down 818,000, we got a little kickstart of, oh my God, things are not as good as they said, and then all are forgotten. That lasts about 2 weeks, and then poof, jobless claim is low, unemployment rate is down. Like I said, it's just the narrative is so full of nonsense. I can't even think about it. It's just crazy. All right, Dia. As much as I was annoyed that my short bear spread keep not working, I tried to put them on with a certain price, and I keep not getting it. I'm not disappointed, okay? Because every time that I miss and the market went high, I'm just like, ooh, dodge a bullet. Does not mean that I won't try to put on another bear's play, okay? But keep in mind, we are near mid-October already, and so I don't know, okay? If there is any selling pressure, it might dissipate in the next 2 weeks. So whatever bear spread I tried to put on in September and keep missing, maybe it was a good thing. Sometimes a miss is a good miss. Dia, would I touch it here? Hell no. Oops. SPY. Would I short SPY here? I try, I fail, I keep missing it, and I'm not regretting missing it. But would I chase it here? Hell no. there is no reason to chase any of these. Okay, it's dicey. QQQ, same thing. QQQ is definitely the weakest of the big three because it's nowhere near yet to the 52-week high compared to the DIA and the SPY. So, but still, no touch, no short, nothing for me there. Lastly, the small cap have a big bounce Friday, but eh, eh, up 10% for the year, year to date, lag behind all the other area. No, I just don't. Now, if you want to have exposure to year end, I don't think it's a bad idea to buy IWM down here in the 214 range. I don't think it's a bad idea if you can buy at the 50 because maybe the year end push will get you another 10% up. Is it a 10% move? Maybe. Okay, now can it get up into 236 range? It's possible. Okay, year end rally, who knows? Okay, my crystal ball is broken. I'm just going pure technical here. Okay, my crystal ball on CPI economy has been wrong all year. I might be right 1 week and then wrong the next 3 weeks. At this point, I give up looking at my crystal ball when it comes down to the economic data. It is nothing but a bunch of mumbo jumbo nonsense. Okay, so we're done with all the major indices. Let's go to something that I don't forget. Gold. Let's hop to gold first. Now, gold surprised me on the strength that it has because gold was moving up because of the weaker economy, right? Well, not the sole reason, but one of the main reasons. Not just our economy, global economy. Okay, you heard talk about China buying gold, European buying gold. So, but the U.S. Economy, we are good. Everybody else is bad. Okay, so gold holding up while TLT tank is kind of suspect. Okay, so be careful. GDX, it was an easy selling puts down here, but I was doing well for 2 weeks selling puts, and that opportunity right now has dried up. Would I buy GDX here? No. Okay. Would I trim GDX if I get anywhere near 42? Yes. Right, so get that out of the way so I don't forget gold. Max 7, NVIDIA. I trim, and I get more order to trim at the high. Okay, so I'm down to less than half of what I had down here. Okay, I'm down maybe 60% of what I had on the way up, and yeah, I can be greedy. All right, it's been a decent game. I would be chasing it here, but anything near 140 to 142 is a trim. Okay, Google. I talk about how I like Google for a long time. It's my favorite of the Max 7. Okay, I sold put spread. I bought some share. I have ordered in to buy more share down here. Okay, I would love to buy Google at 156. In fact, I sold put spread down there 155, 150. So I'd be more than happy to gobble up 100 shares or more. I saw a couple put spread down here. So, but as far as buying a few shares here and there, if it get down to below 160, I will keep adding small. Okay, I like it. Okay, there is a potential big move in Google coming into year end. I will wait for people to see what do you see in the pattern in the next of the last 2 months. Take a look at the last 2 months and see for yourself if you see notice a pattern developing. Okay, for me, inverse head and shoulder, shoulder, head, could be the shoulder. Okay, so what I'm looking for, okay, is that's why I don't mind buying down here, even down here. Okay, so between here and here, I buy. And if it bounce, coming into year end, into this spot right here, then it complete the inverse shoulder, head, shoulder. And then if it break, then giddy up. We can run up into that area right there, 180. So I do see a potential nice move up there. Okay, I mean, it's not huge, but I'm not gonna complain, right? So yeah, so I do. Google is the one to buy the dip here. Okay. The one I also added was Microsoft. Yeah, I add, and I sell put spread down here, 400, 395. If Microsoft come down to 390, yeah, back up the truck. Okay, I like Microsoft here. So yeah, I would not hesitate to buy big. For now, I think I have I sold a couple of put spread. One was 400, 395, and the other one is way down here, 385, 380, something like that. Okay, so I got two. So if one failed, that's okay. I gladly take the share way down here too. So for now, I like Microsoft. That's my second choice. Tesla, I sold put spread a couple. I sold 3 on this down move here. It is what it is. Okay, Tesla is Tesla. If you don't sell up, if you didn't sell up here, I don't know what to say. Isn't it clear? 1, 2, 3, 4. Come on, right? Sometimes when I hear people ignoring the obvious, I'm just like, whatever. All right. Would I buy share outright? Yeah, come down here. Come down to this gray area, and I will buy a few share for a trade. For now, that's where my put is. Okay, that's where my put is. I sell 192.5, 187.5, 190, 185. Yeah, I sell down here. Not a lot of money, but 20 bucks, 30 bucks for premium, I take it. Lunch money. Apple, no reason to be in Apple. No reason to buy Apple. No reason to, I don't, if you want to own Apple because you are a long time lover of Apple, that's fine. But as far as a trader, I see nothing here that tell me that I should buy Apple. There is nothing in any chart that tell me Apple is a buy here. Nothing. Netflix, still way up there. Same thing. There is nothing in the chart here that tell me that it's a buy. Okay, I should change this into a fib. I'm gonna change this. Remove this because it's clear now that it's done. Right. So let's do a fib extension. Right there. Okay, right there. Oops. So that's where it can go. Okay, because that was a resistant, breakout. So next up is up there to 747, and then 77, 78 kind of thing. Yeah. So yeah, time to switch over to the extension. Last one of the Max 7, Amazon. Same thing here. There is nothing compelling in this chart to tell me to buy. All short, okay, long or short. I just don't see anything here that is worth doing anything in Amazon. I have a few shares that's I'm long, but if I see anywhere up there, I'm trimming or get very few shares. So I probably just blow out the share if I see, I think I have an order in, to be honest, at 195. So yeah, if we get to 195, the few share will go out the window. Alrighty, let's touch on some old tech. Adobe, I like. I bought. I sold puts. Would I buy more? Down here. Now, what I probably will do, which I haven't done yet, is move my stop. Okay, move my stop. My stop was here. Prior to Thursday and Friday, my stop was a low of day. On this move here, I said, okay, let's put a stop. Now, I'm gonna move my stop up here to 489.35. Okay, and then put a buy order down there at the fib. So if this failed for whatever reason, I will take a loss, a small loss, because my average is around 500. I bought a little bit up here, but I bought the bulk of mine between 505 and 500, and I bought a few more down here. But the average is like 503, something like that. So I might take a $10 loss on this if that happens, which is not a big deal, but I would rather get stopped out there and then reload down here. Okay, so that's the play on my Adobe position. Intel, buyout. If you're in, the only reason you should be in it, all right, of course, tax loss selling bounce, okay, because this is one of those stocks that potentially could have bottom already. Okay, I mean, after this nasty rip down, I'm not shocked that for the next month, right? Because basically from early August to mid-September, 6 weeks. Okay, yeah, tax loss for sure, especially when a lot of people own it in the 40s and 50s, cut in half or more. Yeah, if there was no buyout rumor, trust me, if there was no buyout rumors in the last month, this sucker would have been like flat line down here in the 18 to 20 range. There is no reason for it to be in the mid 20s. No reason. None. Zero. Zip. Nada. If I was Qualcomm, I wouldn't buy it. Okay, and let it die. Insert Bond villain. I want you to die. um, yeah, I can't even imagine what kind of valuation you put on it. Hopefully, they don't pay anything in the 30s or in the 40s. Can I see somebody paying 30? Maybe. But please, Qualcomm, if I was advising you, don't pay anything more than $30. Okay, please don't. Your shareholder will not be happy. CRM, what a nice move, but yeah, it met the gap fill. Okay, it met the channel high. Okay, it's a no touch. All right, I trim. Um, I might put a stop on the rest of my stock here. I did not put yet, but I trim on this move, and I think a stop here would be wise at 284 ish, and buy back $10 lower. I wouldn't complain. Would you not want to save $10? Yeah, I would. IBM is just ripping, and it got to the fib extension, the 61.8 fib extension, and retrace. Okay, so there you go. Once again, the fib extension works. Okay, look, it came up, digest that fib, retrace, touch the 20, get to that next fib, pause for 1 day, and then boom, 2 days later, next fib. Impressive, okay, hey, I missed it, nothing I can do about it, but be impressed. So yeah, no touch there. Cisco, wow, all right, but it's time to go. Okay, it's time to go. Please, people, please. 3-year chart. Yeah, we at that. Okay, can it get up to 58? Yeah, that's the logical next spot. All right, so if you have it, I think it's time to go personally, but at the least trim some and then trim the rest up there in 58. Okay, what would be the fundamental push for this thing to get up there? What is it? How much cost cutting can you do? All right, so it's okay to be greedy as long as you're not stupid. It's okay to be greedy, just don't be stupid greedy. All right, done with tech. Let's talk. I did pharma yesterday, covered pharma a couple days ago, right? So we're gonna skip pharma. Let's do banks. Wow. Goldman Sachs touching the all-time high briefly. No, it's a no. Okay, as far as owning it, no. If you have it, good luck going forward. I think the risk reward, I wouldn't be chasing it here. Would I buy it on a pullback into the 100? Yeah. See, last time, bang, golden, bang, golden. So yeah, the 100. Otherwise, I don't care. Morgan Stanley, wow. Okay, it's time to go. How far can this run? Up there, wow, 122 and beyond. Let's go back 3 years and see what the chart show you. Yeah, that's the channel that has not been tested for over a year. Okay, so channel low, channel high, channel low, and then break. Okay, so but this is not random. Okay, look, go back 3 years ago. Right, look at that. It's key. Okay, so look, last time it got there, sharp sell off. This time it's stronger, so maybe it will break that long-term ref high. It has. The question is, can it hold? Okay, let's go back even further. 5 years. Yeah, that's major. Okay, that's serious rare air we're coming up to Morgan Stanley. Personally, I'm out. Okay, I'm out. But yeah, that's all-time high. Okay, you're talking all-time high. It's hard to chase all-time high. There are people that love that stuff. Okay, like there's people that think the all-time high is the spot to buy because it's momentum player. Not me. I just, it's against my personality to chase all-time high. Wells Fargo, same thing here, very strong. Okay, very strong, and I would not be chasing it. It's at that area where I say, if you have it, trim for sure. 62.5. Yeah, banks earning is coming up in the next 2 weeks. A lot of banks, so watch out. Visa, I still have some Visa. I like Visa on pullback. Okay, on pullback to 270 ish. even ref low 269, 268, 266, I'm buying. Okay, on pullback into the fib, I'm buying. No question about that. That's why I'm selling my put spread. Okay, but earnings coming up, I will wait patiently for the pullback to buy. But I like Visa here compared to many other financial. I don't like Schwab. I am all out for now. All gone. Bye bye. Um, it's gonna be pain. Earning is gonna be painful for Schwab. That's my prediction. Let me put it this way. If this is the way the market reacted, because Schwab balance sheet is still not good because of their bond exposure, you think where TLT is right now is a good thing for Schwab? You think Schwab earning in the next week or two is gonna be, oh, we are resuming stock buyback because our balance sheet is repaired. You think that's gonna be the tone? Oh no! Oh no! I, I could be wrong, but for now, I'm glad I'm out. That was the goal. The goal that I had coming into this earnings season was, if TLT is weak, I don't want the risk of Charles Schwab coming out with another bad earning with no share buyback in sight, because the market will hammer it. And why holding it at 66 when I can buy it back at 60? That's the plan. The plan is, if it comes down to 60, I will return 10% lower. It is that simple. Okay, on Schwab, I just don't see good things going on there. I think that should be it, right? Because I do a lot of sector play during the week that cover a lot of different sectors. So for now, I think I'm done for the weekend. Thank you for watching. I'm glad Thinkorswim come back to life. Enjoy your weekend, people. I'm out.